Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today is in the new year. Today is July 3rd. It's a Monday. So I want to create a video talking about what are my goals for 2022. And I would like to review everything that happened in 2021. So stay tuned for this video. What am I going to cover today? I'm going to go over a really quick dashboard that I create, and I use a simple method where I set my goals, and I use a something I call a dollar a day method, where my goal is to hit a dollar a day, and then I will 10x that and hit. So my next benchmark is to hit $10 a day, and then the benchmark after that is to hit $100 a day, and then $1,000 a day. And you start up in like tier one, sort of like the bronze level, then you move up to the silver level, then the gold level, and obviously if you can perform beyond that, then you're going to do really well. And then I have some ratios. I'm not going to cover all of that in this video, but I normally cover my cash flow. I do something with what's my total interest that I pay out, and the interest that I receive. And then I also look at total debt divided by my total assets. I don't care about debt to income ratio. I'm not a mortgage broker, so I don't look at that. But what I care about are my debt relative to the size of my total asset base. So what this does not measure is income base. And the interesting thing is some people think that I use this particular model because I'm on high income earner, and that's actually not a true statement. I use this model because I'm actually a low income earner, right? So if I'm making 20 grand, and what I'm saying by that is, let me try to explain this a little bit further. If you're making a high income, it's easy to show really good data, because if I was an airline pilot making 200 grand a year, or some type of surgeon making $400,000 or $500,000 a year, it is easy to show, hey, I saved 82 grand this year. I did a mega backdoor Roth conversion, and I stuffed another 40 grand into it, or whatever it may be. I bought another rental property. It's so easy to show your success, but without telling the context of your income, it doesn't mean anything, because the average person, the person who's working as a cashier, may not be able to duplicate your success because their income doesn't allow it to. What I do is, this is the reason why it's not that I make high income. I'm actually on the lower side of the income stream. But what has worked for me is, income is not something that prohibits me from hitting my goals, because what I have learned is I accumulated a lot more assets over the last 5, 10, 15 years. And over time, my income actually has a very small factor in it. And again, by saying that, it's not because I make $400,000. I teach that ordinary people can do what I do because you don't even need $100,000 income. This can be done on a much lower income. Now, if you don't have assets, of course it's going to look really bad. It looks horrible. You're wondering, how does this work? And this is why I always teach this concept of, you start with $1 at a time. I started with less than $1 dividend. My kids are up to like $4 dividends every quarter now, and my youngest one is 10 years old. They don't have an income outside of a $10 allowance a month. So my kids don't make a lot of allowance. I'm not giving my kids $100 a month, or some parents give $20-$30 a week. I don't even do that. My kids take their allowance money, they buy dividend stock, and then they're learning how to accumulate this monthly or quarterly payment. And that's what I do for myself, a real simple strategy. So let's get to the numbers. So this is my final result, and I'll go over it real quick with the mouse. I hit my goal of making over $100 a day in new capital going into assets. And that's the sum of all of these. And I'll go over each one. So my 401k plan, I saved $7,700 this year. What that works out to is about $21 per day. My portfolio did return about a 24% return, which is really good. I mean, I don't expect that every year. My company gives a 50 cents match, which is not a lot. Based on my last day portfolio, it said I received $3,700 from my employer. which is not bad. Okay, so let's move on to the next piece. The dividend income is actually, it's growing, but it was lower than my peaks year. And I'll go over this reason why. When COVID hit, a lot of companies that were paying dividends actually suspended their dividend payment. Ford, GM were a few that I remember, but there were a few others that really stopped their dividend. And some of them stopped for all of 2021. And I remember Ford reinstated it at the very last quarter and had a payment, like I think in December. But the point is, so my dividend income took a hit in 2000 and it took a hit in 2001 and it's starting to recover. My options trading, I made about $12,700 a share. I removed the dividend because you don't want to double count it. For those of you who watch my 1,500 trade challenge for 2021, know that I did 1,308 trades for the year, and my net profit for the end of the year was $12,700. And that's this number here. On my videos, I use 19 grand because I had some dividend factor into that particular portfolio. I stripped it out so you can see the numbers. Then I have some other stuff. E-Trade lets you do security lending. They pay you for lending out your shares for people who are doing short selling. I made very little, roughly $30 the whole year. I used to have rental incomes and properties. I lost it all, but I still have an item here because in the future, and I don't know when, I would love to get back into real estate. So I used to own real estate, lost it all 10 years ago, and I'm rebounding. So this shows you that somebody can lose everything, had a bad experience, and then at some point in the future, I'm going to try to rebound from all my mistakes and then recover and then just start killing it again in all these different areas that I'm focusing on. And one of the newest one in this new chart is this crypto. I didn't really put a lot in, less than $1 a day. I believe I put in about $1,600, about $4 a day. But the best thing was Bitcoin did return about 60%. Ether returned about 390. I didn't get in at the beginning of the year. Otherwise, I would have 15,000% return for Solana. And Polkadot, I think, was about 700 or 800%. But again, I missed it. I didn't get in at the beginning of the year. And again, those are small positions. I'm starting to build them up. Now, what does this all mean? If you sum all this up, it adds up to about 36 or 37,000. I forgot what the exact number is, which is more than $100 a day every day of the year, including weekends and holidays. So this is why I like tracking it. And then I like tracking things like free cash flow. Remember, your money that you make is like a business. So I track it like a business. After all bills are paid, am I in a positive or negative? Then I track things like how much interest do I pay out in debt versus all the earnings I get from assets, like dividends, like anything else that pays me. Remember, staking is so little. I do stake some of these coins and you earn very little, but I factor all that in here and I have a ratio. So what this tells me is how much interest I'm paying out over my income. And same thing with this total debt, right? If you have a lot of debt and like a $700,000 in debt and you have $1 million portfolio or asset value, really, right? It just means that your net worth is really $250,000 because when you subtract out the debt over the, I do the same thing. I don't care about income. What I do is I look at my total debt and I divide it by my total assets and I get this thing. And what this tells you is your answer is going to be zero. If you have zero debt, it doesn't really matter. It's going to be zero. If you have debt, right, the answer is somewhere between here. If it's 0.5, it means 50%. Your debt is 50% of your asset if it's 0.5. You see mine is 2%. So my debt is only 2% of my total assets, which is really small, right? I can liquidate any asset I want and be debt free at any given point in time. I don't need to do it because my dividends is greater. Oh, not yet anyway. I think it's not greater than my total debt, but the income I generate from some of this stuff, it is greater than my total debt. And that's the beauty of tracking everything. You can see where you stand and why you do certain things and what makes sense for you. Now, some other things that went really well for me this year, my credit card points. I know some of you don't like credit cards. If you're a hardcore Dave Ramsey fan, of course you're not going to like it. And I get it. I'm not here to teach you one thing or another. I'm just sharing what I'm doing. But I hit platinum status in Marriott. It was a great thing. I spend very little money. I don't do business travel, and I haven't done business travel in about 15 years. So I'm not doing something that is special because of my job. Some of you travel 200 nights a year. You can rack up way more points than I can. You can get titanium status, ambassador status, or whatever the highest one is in your hotel loyalty program that you use. But for me, I don't have that. I'm doing it the old fashioned way. I got to maximize it using credit card points and subscriber bonuses and referral links and all those other stuff. But I did rack up a lot of points last year. I think it was well over 150,000. The good news is I just got this. This is just breaking news. But today is January 3rd. But on January 2nd, yesterday, I found out that I hit my subscriber bonus for my new credit card. And I got another 125,000 Marriott points. They gave me 2 more free nights to stay, up to a 50-point category night, which is really great. I'm going to get good usage for it. I'm a platinum member at Marriott, and I have something called those 5 SNAs. So the Suite Nightly Upgrade Awards are going to come in handy if I can get them. We'll see what happens. I'm going to track some of that. So I'm really excited. And then my options commission is $4,924. I do a lot of trades, like I said, 1,300 trades a year. So here's a year-over-year comparison. And you'll see not much has changed year over year. My dividend was a little bit lower the previous year, and I talked about this before. That's because one or two of my companies reinstated, and then some of them increased the dividend payout. So that's a good thing. My 401k plan contribution actually went a little bit higher. Last year, I only saved about $5,700. You see, I don't really save a lot of money in my 401k plan. I moved it up to 7. A lot of my clients save anywhere from 15 grand to the max. Max last year was 19,500. So I do work with a lot of people who are much higher income earners than me. They can max their 401k plan. They can max everything out. I don't max anything out. You see that. I'm just saving whatever I can. And sometimes I just have to look at my portfolio as a whole and figure out where and what type of accounts where I need to allocate the capital. Again, security lending is useless. Last year, Bitcoin, I put very little in. You see, I wasn't really sold out on it. I was really putting very little in, $1.70 a day. And you see, I'm now putting close to $4.50 a day. This number will look much higher for 2022. It may hit $2,000 or $3,000. I don't know what it is. A lot of it depends. Sometimes I do one-time purchases. I do have most things set up on a monthly or bi-monthly purchase. And so what I do is I go back and I tally that up and I display it. But my debt ratio is about the same from last year. You see that it is at 0.02 here, and then same thing with the interest on the NII is what I call it, but the interest on my debt versus the earnings. So, quick summary in case you missed it. I added over 36,000. I think it was 37 if you add it all up. It should be about $37,000 of new investments in my asset. Now, why is this important? The average person actually saves less than $5,000 a year. And when the average person saves about $5,000 a year and you do it over a lifetime, this is why the average retirement plan is really low. And depending on which study you read, some of them suggest it's somewhere at 60, 70, or 80,000. Another study I read puts most people's retirement plans at around $120,000. And again, depending on which study you read. And by breaking this data down in this way, I can see that not only would I surpass the average person's account, but based on what I'm doing, if I'm putting in $36,000 of new capital, I'm surely going to beat this. And I'm going to show you a spreadsheet real quick. You see real quickly, at 9% interest rate, if you did it at age, let's say 25 years old, which is probably pretty common. If you scroll this up, $5,000 a year will get you to $1 million at 59. Which means, and I know I read surveys, most people don't even say that much because there's not. if the average person hit it, everybody will be a millionaire. We know that's not true. So that really means people are saving much less. And let's just try to figure it out. We'll back into the numbers. So something like this will show you that, you see, it's still $1,000,000 at 65, which shows you that people are really saving less than $3,000 a year at 25. Now, there's a lot of factors. If you start in life late, like let's say you're 35, you'll see by the time you're 62, you only have this little or not much, depending on how you view it. 65, you have 438,000. So this is why I like this spreadsheet. I can factor things into the future. I can see what it looks like if you have inheritance. I can factor in a $50,000 inheritance, and I can see what that numbers look like for you. You know, I can see if you increase your savings or not. Anyway, so we're going to do this real simple. So I'm going to use my data here. I'm a little bit older. Let's plug in 50 here. I'm going to still use a 8% or 9% rate of return. And I just told you that I'm saving $36,000. And I'm only going to plug in this for 10 years or maybe even 15 years. What that's telling you is, if I do this $36,000 and I have $0 today, I will hit $1,000,000. But in 15 years. If you want to make it a little bit more conservative, use an 8% rate of return, I'll hit it at 65. That's assuming I have 0. Now, you know it's impossible for me to have 0, because how am I getting nearly $12,000 in dividends? So let's alter some of these numbers. Let's just assume some things here. If you do this, 10 years you hit $1,000,000. If you do something like this, you'll see this, right? You'll hit $1,000,000 in 7 years. So there are many ways to play around with this. I don't like showing you, I like to show you what I'm doing based on 0. So assuming I have nothing, and you're following my journey through my website or my social media platform, you will see, if you follow me, in 15 years, I'm going to accumulate 15,000. In 15 years, I'm going to accumulate $1,000,000, but very little of it is coming through my portfolio. And I showed you that $7,000 was coming from my 401k plan. The year before was, I think, 5,000 and change. So the bulk of my wealth is not coming from my income or my day job. It's coming from other streams of income that I'm doing. And I'm hoping that this Bitcoin stuff, if it continues to go well, it may actually become 5 or 10 or 15% of my portfolio, where it will actually shave off a few years, right? Because the Bitcoin generally averages a much higher rate of return. You're not going to be aiming for an 8 or 9% rate of return anymore. The rate of return is actually closer to 100%. So if you go back to this, maybe I was even wrong in assuming that the average person saves 5,000. Based on some of the numbers that I just tossed in, I think the numbers are actually going to be less than that. I think it may be 2,000 to 3,000. It's really a more realistic number that most people are saving. And again, I showed you that I have 7,000 is coming from my 401k plan, 3,700 is coming from my company match. I am using multiple strategies. And again, I follow my own one day at a time. And my goal is always to increase it a little at a time. And my option trading is done the same way. I don't really have to chase returns. I'm not chasing 20% return, 30% return, 100% returns. My strategy just requires a 7% rate of return. Obviously, I'm beating that just in the S&P 500. You can set it, forget it, don't think about it, and I will do just as well. Retire comfortable. But what I like to do is, because this is my hobby, some of you play golf, some of you race cars, this is my hobby. I actually, even though I only need a 7% rate of return, I like to look for returns, look for areas where I believe I can outperform the market with very little risk and very little work. And that's what I do. I'm using options to hedge a little bit. I'm also using some of the digital currency, Bitcoin, Ether, whatever it may be. That's a small hedge in my portfolio. And I'm not chasing returns. I didn't sell my house, or I didn't sell cars. I didn't sell a lot of stuff. You saw what I did in my previous slide. I reduced my ESPP plan to get there. Oh, maybe I didn't cover that yet, but I'll go there next. So here's the raw data, 401k plan.
This plan in the beginning of 2001 was only 54,000. You saw how much is my contribution. Here it goes, and you see over here my employer contribution. Actually, this slide is a little bit older. I thought I had a newer one, but apparently I pasted the 2-day old one. But I picked the final number 7,700, and then it was 3,700 for the match. The return rate was roughly the same. This is accurate for here. Okay, we're starting again. And so, we're starting again. Delete all that. So now that you saw my data for 2021, what am I going to do differently for 2022? And here it is. I want to increase exposure to digital assets. Obviously, I'm going to add well over $1,000. I think I averaged $1,600 in new capital last year. I would like to add more. And not only am I still collecting Bitcoin, a little bit of Ether, I want to add some of these newer coins like Solana and Polkadot. I believe that there is a valid use case. If you follow Bitcoin gaming, there are some of these gaming platforms that are built on some of these newer blockchains, because some of the, like Ether has a problem with gas fees. You can't pay 50 or 60 or $100 on gas fee if the asset you're buying only worth $5. That just doesn't work. Imagine going to a store and want to buy a $5 Starbucks coffee, and then the tax is $100. It's just not going to work. And that's what's happening with Ether. So there's a lot of people looking at these other blockchains. I don't want to call them Ether killers or Ethereum killers. I'm not a big fan of, I think everything can coexist. And because blockchain, most of these things are open source, new code will be inserted and the system will get upgraded and eventually get better and smarter. So I think not everything over the blockchain to also have some new upgrades so that you can evolve the network. That's what happened with Bitcoin. They did Taproot upgrade not too long ago. Ether did the same thing by improving or burning off of some Ether, and I think it was EIP 1559 was the improvement protocol number, I think. So here is what I'm doing in my 401k plan. I did up my pre-tax 401k percentage by 1 percentage point. And then I moved my Roth 401k percentage to 0. What that will do is by shifting some things from post-tax to pre-tax, I will save some money in taxes for 2022. Another thing I did was I lowered my employee stock purchasing plan. I lowered that percentage, so I'm going to be buying less company stock. And the difference of what I'm saving, I'm going to use some of that savings to buy more digital assets. So that's where the money comes from. I don't have unlimited cash. I'm like you guys, I have to work a day job, or if you get cash from a real estate property or some type of royalty. But that's what I'm doing. I'm using my new cash, moving around, no longer buying company stock. I'm going to buy more digital assets. Option trading, I was a little bit disappointed this year. I didn't hit my 1,500 goal, and I also underperformed on my profit target. I hit 12,700 profit in my options trading, but that is lower than my average for the last couple of years. And so, delete that. So one thing I learned is I have to learn how to not lose as big as I have. There are some big trades that I'm losing
multiple thousands of dollars, and that sucks all the profit out from all my trades. And it was really hard because if I'm only making 15 or 20 bucks a trade, even if I trade another 200 or 300 times, it's going to be really hard for me to hit my $15,000 profit last year. So a little bit of a disappointment. Now I do agree, a profit is a profit, so I'm not totally upset, right? I don't have any losing years. I never blown a options account. So my trading strategy works consistently for multiple years now. I was disappointed that I lost money in Q4 of last year. That was my first losing quarter. So when you add up my results for the last 3 months, I had a losing quarter. So that's really a disappointment for me. I did go and review what happened, and again, it was just the market moved too fast in one direction. I didn't close my trades. Instead, I left it open, and that burned me. And there's a couple things I'm going to do different. I got to tighten it up. I got to really sell the losers a lot quicker and then move on to the next trade.
Dividends was, again, I went over this real quickly. My dividends will get back closer to around $12,000 per year. Some companies cut their dividends in the beginning of COVID, in right around April or March of 2020, and most of them also maintained a suspended dividend in most of 2021. A good example of this is Ford Motor Company stopped paying dividends. They suspended it, and they have so for nearly, I think it was, I don't know, is it 18 months or a little bit longer? But in the last quarter of last year, they did reinstate it. They were paying something like, I don't remember what it was, maybe 10 cents a quarter dividend, or maybe even less. I don't know exact details, but they reinstated it. So that's really good. My dividend will go up. Companies are starting to increase their dividend payments again, so that's going to look good. So those are the things that I'm setting up for. I would love to hit, I don't know what I'm going to hit, but I would love to hit, let's say, $40,000 of new capital going to my account next year. Now, my minimum is really $36,500 or so. That's my $100 a day mark, right? Because there's 365. You do that math, that's 36,500. That's really my minimum expectation. I would love to hit $40,000 of new money going into all my assets. So with that being said, I hope you enjoyed this. Hey, follow along in my journey for the whole year. I create videos on my trading. I create videos on my hotel hacks. I create videos of a lot of different things. You can see my moves. I'm fully transparent. There are times where the only thing that I'm not transparent about for some of these things are I will hide the details of some things, but you will see the dividends. You will see my brokerage account. You will see some of these numbers. I put it in a pivot table. I pivot it for everyone so you can see what I'm doing. And it's pretty easy to follow. So follow me along for the journey. I would love to see what happened. Again, assuming I have zero assets, if I just do this another 15 years, I will accumulate another $1 million. So this is the power of learning how to live off your assets, learning how to get assets that generate more income or earnings or other stuff. You'll see it. That's why I would love to get back into the rental market, get a rental property eventually, and get some residual income that way. Hey guys, thanks again. Comment below. Give me a thumbs up. As always, let's do this together. Let's do this $1 at a time and have a profitable year. Bye-bye. Use this as the final end screen.